Hello traders, I'm Luke from Disciplined Trader. This video is part of the Trading Basics series, and in this one I want to talk about trading strategies. For new traders, it can be very confusing to get to grips with all the different terminology used within the trading and investing world. Often different people will use the same term and mean different things by that term. For example, one person's definition of a scalp type trade may be what another considers to be a normal day trade. I find the same ambiguity when reading about trading strategies. Some people's definition of it will be an all-encompassing approach that considers everything down to the tax implications of any profits made, whereas I like to split my trading approach as a whole into two parts. I have a trading strategy and a trading plan. I like to think of my trading strategy as the framework of guidelines and rules that enables me to analyse the market and identify trade setups and their relevant targets and stop loss levels. Anything outside of these details, such as risk parameters, any time constraints, how I plan to grow my account, etc., are covered in what I refer to as a trading plan. In this video, we will look at a trading strategy in detail and discuss what it aims to do and how it does this. If you have ever opened a trading platform, real or demo, and placed a trade, think back to that trade and ask yourself why you entered the market at that price and at that time. If the answer is something along the lines of, well, I looked at it and I just felt like it was going to go up because, well, it had already come down, then you are like the majority of us that get into trading and just start having a go. The problem with that approach is it doesn't give you any tangible information to help you when weighing up the next trading setup. You will still be relying on your gut feel, and I'm sure that everybody with common sense can see that taking trades based on gut feel will not yield long-term profits. And the reason for this is twofold. One, you are not taking consistent trades, and two, you don't have an edge. People that make money trading don't profit on every single trade. Trading essentially boils down to a game of probabilities. Your strategy is there to tip the probabilities in your favour. In the previous video we talked about having a trading edge and how this makes you money over the long term. Well, a trading strategy is what gives a trader their edge. As I stated previously, I like to think of my trading strategy as the framework of guidelines and rules that enables me to analyse the market and identify trade setups and their relevant targets and stop loss levels. By having a robust trading strategy, I am able to identify consistent setups that provide me with a marginal edge in the market if I act according to the rules of my strategy. This does not mean that every trade I will take will make a profit, but it means that if my strategy truly does have an edge in the market, it will make more money than it loses over the long term. But how does it do this? Well, let's break down my strategy as an example. A trading strategy can be thought of in terms of layers within a pyramid. You have the base layer, which is the underlying methodology used to analyse the market. This is the foundation of the trading strategy. On top of that, you have supplementary forms of analysis. You may have a number of these. The main aim of this layer is to highlight confluences between the different analytical methods, which in turn should provide you with high probability setups. The last layer deals with the entry and exit methods for the trade. By utilising a structure like this, it should help you build a strategy that highlights consistent trades that will give you an edge in the market over the long run. For anyone that has watched any of my live trading videos, you will know that the underlying method I use as the base of my trading strategy is support and resistance analysis. This gives me an overall roadmap of where I'm looking to enter and exit the market. This will be different from a trader that likes to use market trends or market momentum, for example, as the base of their trading strategy. Once I have my support and resistance bands plotted for the day, I move on to the intraday levels of support and resistance, which include the daily pivots and the previous day's open, high, low and close. I don't tend to reassess my support and resistance analysis once it's been completed for the day, but I now have a good idea of where price will likely give me some trading opportunities as the day unfolds, so I can move on to the next stage of my strategy, which is the analysis of price action. This analysis is always ongoing throughout the day. I'm looking at the basic movements of price and trying to identify opportunities that align with my support and resistance analysis. I have some basic rules that price has to abide by before I enter the trade, so until that happens, I am constantly watching the price movement. Once everything lines up, I will enter the trade and set my take profit and stop loss levels according to the rules for this. Again, these are based on my support and resistance analysis and any previous price action that I think is relevant. There will be certain factors that I take into consideration that can overrule a valid trade, such as a poor risk to reward ratio, or if it's close to the end of the trading session when the trade sets up. All of the guidelines and rules I use have come from many hours of backtesting. I start with a particular idea and then I test different permutations of it to see if it has any value within my strategy. If I find that it has a net positive effect, then I will integrate it into the strategy. However, if it doesn't have a positive effect on the strategy, I just throw it away. If I watch the price action all day and it doesn't line up for a trade in that time, I simply don't trade. And this happens more than you might think. At the end of the day, my trading strategy is there to enable me to pick out what I deem to be high probability setups that will make me money over the long term. It's not there to provide me with something to do every time I sit down at the markets. In order to take a trade, I almost have a mental threshold test that the setup has to pass by meeting enough criteria set out in my trading strategy. Does it meet my support and resistance rules? Yes. Does it meet my price action rules? Yes. Are there any overriding factors that mean I should skip this trade? No. Okay, then I'm good to enter the market using the entry rules I have. Every step of my trading is structured with rules in an attempt to minimize any external effect on my profitability. What I mean by this is, I don't want my execution of my strategy to have more of an effect on my trading performance than it has to. Obviously, we are all human and make errors from time to time. We also have to deal with our emotions, which can be difficult to contain in certain situations. Therefore, I try to structure my strategy in such a way that it minimises the effect this could potentially have. So hopefully you now understand why you need a trading strategy and have a reasonable idea of what one looks like. You may be thinking, however, how do I build a trading strategy of my own? Well, if you are brand new to trading, I would recommend not worrying about this straight away. Instead, learn the basics and then do some trading with different approaches on a demo account to see which fits your lifestyle and personality best. This may be support and resistance analysis, momentum analysis, Fibonacci analysis, or whatever you find works best for you. Then it's all about continuing your learning and backtesting your ideas. This process can be rather tedious, but also very exciting as you are discovering the bones of what will give you your edge in the markets. So that wraps up this video on trading strategies. I really hope you have found it useful. If you have enjoyed the video, please feel free to leave a like on it. If you have any other questions or want me to cover any other topics in future videos, please let me know in the comments below. Also, subscribe to the channel for more videos like this one. I will be continuing this Trading Basics series to provide new traders with all the knowledge they need to get started. Thank you very much for watching, and I hope you all have a good trading week.